TJ the Wheel Dealer coming at you live with another episode of Riot Weekly, bi-weekly, monthly, quarterly, whatever it ends up being. With Tevis from Fundamentals of Investing. How are you, Tevis?
Doing good, man.
Awesome. You look a little bit dark. Are you you having date night over there? What's going on over there?
No, I was just on a live stream right before this, and I was getting this blurry vision from all these freaking lights, but I'll turn them on for you. So hope I don't pass out on stream. No, I think I'm fine now. I had some water. Gotcha. I think I was having the blurry vision, and I was like, oh, wait a minute. I've been running strictly on caffeine today. That's it.
One of these, maybe, on two of these,
right here.
Which one's your dude? Mine. I'm into this wild berry right now. I go through phases with these Celsius, and wild berry's my jam right now.
Dude, we don't get them in Canada. We only get 3 flavors. So we only get the orange, the peach, and the tropical one. So I don't get any of the 30 whatever flavors you guys have.
Yeah, I don't know how many there are, but I go through little stages with them. There was a watermelon one that I was really into for a while. Bob Hansen, shout out to Bob. He sent me a case of one of them. I have no idea which one it was, but I know he bought it via Amazon, so I'll ask him. But that was my jam for a while, but I don't know which flavor it is. I haven't been able to buy it since. Anyway, let's get into it, dude. I wanted to talk first and foremost, real quick recap on, I know this is Riot, but we're going to go all over the map here because it's our show. We do whatever we want, right?
Yeah.
So let's talk about real quick, because we're both very big SoFi. We're both SoFi investors. It is my second favorite stock in the entire market, right under Tesla. What were your thoughts? You just give me 3 things. Give me 3 things that you loved and 1 thing that you didn't not so love, if you will.
Okay. That's a good question. Okay, so 3 things that I loved. I think I loved the fact that the loan platform business is going to be knocking it out of the park in 2025 with that $5 billion deal that they have over the next 2 years. I love that financial services has 47% margins and is growing 84% a year. Last year in 2023 full year, they didn't do profit. And then in 2023 full year, they had minus 200,000 or something like that. And then in 2024 full year, they had over 300 million in profit. So that business is just printing money out of thin air, and they're growing 84%. So that's going to be amazing to see. And then I also love that the tech platform, they're providing us with deals now of, notable deals. I don't love the fact that all of those deals are going to be showing up on the financials in 2 years. That's, I think, a year. That's a long time to wait. I also really, really don't love how they continue to be so conservative around their guidance numbers. And they're just, I think, playing it way too safe. And, one thing that I mentioned in my video was it seems as though there's some cognitive dissonance. What they're saying is different from what they're doing, because they're saying that this is going to be the best macro environment that they've had in the last 8 years, and the business is going to, absolutely crush it. And what they're doing is they're providing really conservative EPS estimates. And I understand why, because they're saying we're going to reinvest back into the business. And so the actual revenue estimates are not that crazy. But the market, I think, is going to be largely judging them based on EPS and based on the profitability of that business. So it remains to be seen. I think the call was absolutely terrific. I think, them answering questions around crypto, around the loan platform business, and overall just SoFi Plus launching this month, all that was great. But it's just, again, their nature of being conservative doesn't really affect us as investors who have a long time horizon, but it does affect us if you have management incentives in 2026, because it's similar to hey, you're going to buy a stock, you're going to hold it for 10 years. And it doesn't matter if it's down for 2 years or 3 years. But then if you're going to buy an option for 2, it does really matter that time frame, right? And so that's really similar to how I'm seeing this. And okay, that's a lot of rambling. That's more than you bargained for, but a mix of positives and negatives.
I'm eating cucumber because I'm watching my weight. I'm honing in on my diet. So These are the snacks now, as opposed to candy bars.
That's depressing. It's very depressing.
Because I am working out like crazy. So I already feel the results, but the only way to see the results is you got to be on a calorie deficit. So this is a way to get into a calorie deficit, but I always got to feel like I'm eating. You know what I mean? Let's get on track. Let's get on track. What did I love about the earnings? I love that what they said they were going to do, they did.
Yeah.
Because to me, the earnings tell a story, right? The numbers, the call tells a story. Excuse me. The numbers confirm that story. They substantiate that story. And then they give you guidance. They give you another story, right? It's a big old storytelling. It's a big old fireside chat, if you will. And then the numbers are going to come in and they're going to have to prove whether or not what they told you came to fruition.
Right.
So I like that they've been able to do that since they went public. I think just what I don't like is excessive sandbagging.
Yeah.
Because I think they are not getting credit for all these double and triple beats on the top, middle, bottom line, whatever you want to call it. Because we already know we're hip to the game. And if we're hip to the game as retail investors, Wall Street's hip to the game. They're smarter than we are, That's why we're called the dumb money, essentially. So they're not going to get credit because they were supposed to beat because the bar was kind of low. Now we can be like, well, the analysts put the bar here too.
Yeah.
But I'm like, well, the analysts have already proven that they don't know how to value this company. So how much credence do you really put on that? Nobody knows SoFi better than SoFi and the brass, right? Nobody knows what they got going on better than them. But I do like that they are opening the floodgate a little bit. So even though they're guiding conservatively, their actions say otherwise because they're willing to go outside of the box and do these deals where we're going to underwrite loans and fee for service, however all that shit works. Y'all are the geeky guy. I don't do that stuff. But I do know that they have very high margin businesses and they're opening the floodgates on that, but they're also minimizing their risk and their exposure. So that I love. And I also love that they reiterated 2026 guidance because a big part of my investment thesis is all predicated upon the PSUs for June of 2026. So if they hit that metric of about 80 EPS, I think they're going to come in at about $1 because I think there's going to be an inflection point somewhere along the way. That is just my idea.
Yep.
I think they'll easily be at 25, maybe in that $35 range, and it'll be justified. What don't I like? The lack of admission, meaning they fucking overpaid for Galileo and Technisys, bro. Let's just call it what it is. I know it probably looked good in the report because there was this goodwill thing that you explained to me in Vegas.
Right.
So that helped, right? That actually helped for one of the quarters because they were able to write off those mistakes. Kind of like when I roll options, I'm writing off a mistake, essentially. Right. Like that's my goodwill, my manufactured goodwill, my manufactured tax harvest is rolling options, especially cover calls in the money. But I would just like Noto to say, hey, had to do it all over again. Maybe we overpaid by like 25% or 50% on this Galileo thing because I didn't realize that it's a pipeline business, but we also didn't realize how long the pipeline was.
Yeah.
And I think the street would give them a lot of credibility for that because owning your shit, like owning your mistakes, dude, that is indicative of a very strong character.
Yeah.
And I think it's time for SoFi to say, hey, I know it doesn't look good, but we still believe, and give us that confidence and then just give us a legitimate window of when do you think the shit's going to start pumping from the other side of the pipeline? Because I almost feel like it's getting started in real estate and you're struggling, you're trying to find your buyers, list some homes and everything. And you're like, oh, I think I'll hit the ground running in 6 months. And it ends up being 6 years. You know what I mean? And that happens in some professions. That happens in some professions, in some sales cycles. Right. Like I was in a home security business, dude, where I could walk into the door and be like, hey, my name is TJ. Your lucky day. I'm not only with Soteria Security, the fastest growing ADT dealer in San Antonio, I'm actually the owner. So normally I have salespeople coming out here, Mr. Jones, but I came out here myself because all of the commission that we're going to pay them, we're going to pass it on as a savings to you. I just need one favor from you. I need to put my advertising in your yard. I need to put my sign in your yard, and we're going to give you the installation and the equipment for free. All you got to do is take care of the monitoring. It's about $1 a day, and you'll have peace of mind. I mean, did I remember like it was yesterday? Because we sold 10,000 of those bad boys. You follow me?
Yeah,
And
I
dude, I had about a 97% ratio, a closing ratio. They call me the king of the kitchen table for a long time. But that was a very quick sales cycle. And it was a no-brainer deal. We're going to give them like $1,500 worth of equipment. And the only thing we needed them to do was sign on the dotted line for 36 months at about $1, $1.50 a day, depending on how many goodies they wanted. So that's a very fast sales cycle. But this shit here going into a huge financial institution saying, hey, your infrastructure is the dinosaur age.
Yeah.
We need to get you up into century 21 or whatever. And you're going to have to do ABC 1, 2, 3. They're probably getting a lot of pushback.
Yeah.
A lot more pushback than they anticipated. And I think it's time to just own that and give us some legitimate guidance that we can sink our teeth into as investors, because I think they are getting a bit of a hybrid multiple right now. And I think that the market's getting a little antsy, if you will. What do you, can you put a little more color on that?
I don't disagree with anything you're saying. I think it's obviously like the market is impatient because the market is impatient. They want growth yesterday, and they want high levels of sexy growth yesterday. I agree that the purchase of Galileo, I'm not going to say they overpaid, because it's really a function of how long you're willing to hold that thing.
Right.
If they make their payday in 10 years, like who knows, maybe that's what they intended all along, because of the wider vision that it plays in that ecosystem of being this one-stop shop. Now, what I will say is that you have to balance out that desire to have a quick payout today with really what this means, because with Galileo, they have such deep hooks into these companies that the integration period might take 1 year, and they might get all of these objections throughout that 1 year, but that integration is for life. They're never switching that again because of the sheer amount of headache that it takes to integrate them in the first place. And so it's really like you're making a sale once for life. And I think that that is a great business model. It's just a matter of actually, doing the repetitions and the cycles. I really like this time around that they're going to consumer brands, they're going to hotels, they're going to other companies that are just not traditional finance companies, not traditional fintechs, not traditional financial institutions, because I think that they have an opportunity there as well to maybe expand those offerings out and expand that net of the total users. People have to get used to the integrations being so long. And at the end of the day, like SoFi management is stuck between a rock and a hard place, because on one hand, we're seeing that they're not hitting the mark on Galileo. At the beginning of the year, they said 20% year over year, and they came in the teens. And we're saying, hey, actually, the technology platform is a black box. And then when they do provide these notable deals, the first thing that I said was like, okay, well, cool. It's not going to be reflecting until 2026. So I do think that we have to sort of give management to meet them in the middle and try to understand what Galileo is in the wider ecosystem. Now, what I will say, to be a devil's advocate to that, is that management themselves hyped up the AWS of fintech, like this whole narrative, and people automatically assumed that this was a differentiator for SoFi, and that this differentiator for SoFi was going to be happening immediately. But realistically, what could happen is that, yes, it could be an AWS for fintech that could only materialize in 5 years or in 10 years. And in fact, in the short term, until that time, all of these other segments for SoFi is really what we should be paying attention to. And so I do think I'm taking a more measured approach to say, hey, I would rather wait a year or even wait 2 years for them to close a deal, knowing that they are going to get money from that deal for the next 100 years. You know what I'm saying? Like it makes sense from a cost benefit analysis. It doesn't make sense when I have options on and I'm like riding or dying on the, what the revenue line item is going to be.
What the earnings call reiterated to me is that I can't just run the poor man cover call campaign on SoFi. You have to own shares.
For sure.
Because those shares will not expire. So I am very, very thankful that I'm over 750,000 shares strong and long on SoFi, because I've made a lot of money with options, specifically leaps over the last year and a half, but that is not the optimal play on SoFi because you don't know when that catalyst is going to hit. So it's been a calculated gamble whenever there was that report or the K, whatever the hell it's called, JPWKWB, the dude that always gets the guy that always gets it wrong.
Yeah, KBW.
And it tanked for a while, and I loaded up on the 20s and I made a couple $100,000. That was just a calculated gamble. So when that opportunity presents itself, you should probably take it if you have the risk tolerance. But to just say, hey, I'm just going to keep buying leaps and buying leaps and buying leaps, I think you really need to build up that share count. Because I think that this thing will have a going to the moon moment. It has. If you look at it, relatively speaking, it's up a lot in the last year or so, right? But I'm talking about the next serious rung up the ladder. We don't know exactly when that's going to happen. It could be June 2026. Maybe it's just like you were telling me via text. They'll renegotiate over, they'll renegotiate the PSUs because everything's negotiable, right? Yeah. So I think that you need to build that share count.
It's just like a lot of people that are invested in SoFi and that track the stock are really looking at $25 or $35 or like whatever the tranche is. They anchor their SoFi bias towards the tranches. And it's like, well, the company won't cease to exist at $45. Like they do have a roadmap that extends beyond $45 a share, right? If they go to $45 next year, a lot of people won't even know what the next milestone is because it seems as though it's like so far out of reach. But realistically, the company is building for the next decade plus, regardless of what the share price does.
Yeah, and I think that's the one thing that I love the most about earnings is they're willing to take a couple of step backs to prepare themselves for the next launch. And that is reinvesting into the company now to make sure that their infrastructure is extremely robust and not just doing things to placate Wall Street to hit certain metrics to pump the stock.
Yep.
So I like, even though it's painful because we're all greedy and we want it now, right? We want to get rich now. That nobody wants to get rich slowly anymore, according to Warren Buffett. And I couldn't believe more. But I think Anthony Noto is trying to build a generational type of a business here. And he's like, hey, right now is the opportunity to restructure some debt that wasn't good for us. So they did that, confused the whole market, and that tanked them for a while. Remember that whole deal where y'all had to make a bunch of videos and even y'all sounded confused trying to make sense of that shit. And then now it's like, man, dude, the world is your oyster. You have all of these macro conditions, Team Trump train, everything. It's like you have all these tailwinds, and it's almost like you created a headwind by lowering the EPS guidance because you think that that's going to make more sense in 3 to 5 years. And you don't necessarily care about the share price because you are building a business. And I think that you have to have a long-term mindset if you're going to rock with SoFi, because I think Anthony Noto is going to frustrate you if you're trying to just swing this thing and make a shitload of money in the next 18 to 24 months. I don't think that Anthony Noto is your guy.
Yeah, look, I think that he's not afraid to take on short-term pain for long-term gain. And he's proven that time and again. And, when I broke this down, the earnings, I got frustrated a little bit reading the guidance because I was saying, like, how dare you do only 27 cents of EPS? And then I thought, like, Tevis, you're being a spoiled little bitch because this company did 15 cents of EPS and they're like literally doubling their EPS year over year. Like, how is that a sandbag, And really what it is the fact that we have much higher expectations on this company than maybe what their peers are doing or than maybe what other companies in that same vertical are doing. And it's warranted because the company has been proven to outperform everybody. But again, it's all, I think, a matter of perception between what this company is putting out and what they're actually, reporting at the end of the day, because they put out like 7 cents, 6 cents, and then they came in at 15. If they put out 27 and if they come in at 35, people are going to be really happy. But there's people today that are probably selling SoFi because he put out 27 cents to say, hey, this CAGR is not worth my time and not worth my investment. So I'm not going to be in that stock. And I think both people are right, because whatever you put out there, people are going to criticize. You're opening yourself up to that criticism.
Absolutely. Let's pivot. Are you ready? It is Riot Weekly after all.
Let's do it.
Bottom line, we're still very bullish. I'm still very bullish. I mean, I feel like you are also. And also, this is coming from a very good place in my heart. What the fuck are you doing, guys, if y'all aren't selling covered calls on this thing? There's no way that I could afford to own this stock when there's other places, easier places to put money, and you're not ringing the cash register over and over with these covered calls. And yes, are those covered calls going to cause you pain? Absolutely, at times. That's a positive problem from the standpoint that means that the underlying is performing. But there's no way that I'm going to tie up that kind of money on this stock and not ring the cash register with covered calls and timely cash secured puts. You gotta bring money through the door, because now your brain is focused on something else versus just the capital appreciation when you're not even ready to sell anyway. And I think that's how I'm able to stay patient with this stock. And let's talk about your wheel journey a little bit while we pivot into Riot, CleanSpark, and Marathon.
Yeah.
There's a lot of truth to what I'm saying, isn't there, Tevis? That you have something totally different to focus on now.
Absolutely. And it's just, you don't really realize it until you start doing it yourself and you start looking at those numbers pouring in. And I'm just learning through trial and error in terms of what's best for me and what my risk tolerance is and what that translates to. So since we spoke last, I think it's been sort of a month, since I talked about options. Like, I've reduced that list, because you said, okay, find your 5. And I had at the time like 8 or 9. And I've reduced that now to 3. I'm selling covered calls pretty much at my strike or my break-even price for CleanSpark and Marathon, because they've fallen. And that's on autopilot. Like, I'm just going to keep selling covered calls until I get hit. But really, in terms of running the wheel itself, I'm really only doing it on Tesla, HIMS, and SoFi, because HIMS and Tesla have more than enough premium for it to be worth my while, especially because I'm being way more aggressive with it. In terms of writing like cash secured puts at like a 15 delta, I'll write it at 35 delta or 40 delta and capture that premium, because I'm not as scared of being assigned, because I genuinely know those companies and I'm comfortable with those companies. And like for Tesla, for example, like I'm sometimes even writing it in the money. If Tesla's sitting at 400, I'll write a cash secured put at like 410, right? Depending on what the event is. And so I'm doing that. I'm being more aggressive because I'm much more confident in the stock that I'm owning or the underlying that I'm wheeling, right? Whereas with something like, I don't know, like a CleanSpark or like, Lemonade that I just recently started getting into, I would be much more conservative, because I'm not like, they're more cash grabby in nature is what I'm trying to say.
No, I get it. Well, let's get into it, guys. Let's talk about my favorite miner, Riot. But I am very, very interested, and I have a sizable position in CleanSpark and Marathon as well. I just happen to like a lot more things about Riot, especially the pivot that they did very recently. So what I like to do first, though, this is different than other weekly shows, is let's start off with where we're going to end up anyway. And it's how are we going to make money with this thing, right? Like, I mean, at the end of the day, it's like, it's one thing to know a lot about the stock. It's another thing to know how to make money with that stock. And that is what I really want to zero in on here. It's like, I don't want to just know everything about these miners. I want to let y'all know what the play is, what my play is, what Tevis's play is on these miners, so that ultimately we can ring the cash register with these miners. And then we also want to talk about whether or not the trade is dead as it relates to Bitcoin, because this used to be undoubtedly the best proxy for Bitcoin. And I'm not really sure if that's true anymore. So we'll get into that a little bit once I go over these positions at Tevis. So what I've got here is I've got 150,000 shares of this bad boy at an 851 average, and we're ringing the cash register. Got our ass kicked yesterday and today. So there's that. When you have a bunch of shares, you got to deal with these fluctuations. That's the reality. And I'm agreeing to buy more shares. I got 550,000 in collateral that says I'm willing to buy 50,000 more shares at 11 via cash secured put, and they paid money for that. And that's for Valentine's Day. So for Valentine's Day, I'm either getting a lot of chocolate candy or I'm gonna get a lot of shares of Riot. That's what's going on here. You're gonna see the plays right there. Got 11,200 for the first 200 contracts. Got 12,400 for the next 200 contracts, and then got 8,400 for the last 100 contracts that I sold earlier today. So they're just paying me more and more premium for the exact same trade for tying up, the same amount of capital. So I'm just like, you keep doing that for me, I'm going to keep doing it because I believe in this trade long term. I believe in this company long term. And I don't necessarily know that I want to own more shares at 11, but I'm definitely willing to own more shares at 10. So this is a very manageable situation where I could just roll these cash secured puts if I need to. Then I've also got 125,000 shares for sale at $20 on January 2026. And I've also got an agreement that gives me the right to buy 50,000 more shares at $15 January 2026. So I'm all over the place on this thing. I don't have any short dated covered calls right now because recently we had a lot of them expire last week. So it probably will show it here. Maybe it doesn't, but on whatever last Friday was, I don't know what the date was, 20 something, was it 19? What was last Friday, Tevis, on the options chain?
17, hold on.
24th, maybe, something like that.
Last Friday was the 24th. Yeah.
Yeah. So I don't know why it doesn't show it here, but I had a bunch of covered calls expire. So I don't know why it doesn't show all that. But anyway, bottom line is I don't have any short dated covered calls on Riot right now, and I don't want to because it's kind of been in the dumps a little bit. So I want to wait for a nice green day before I do that.
Yeah.
So then let's talk about CleanSpark and Marathon. So in CleanSpark, a much smaller position, but it can get even bigger than Riot's depending on how things play out. So there's 25,000 shares at 990. So I'm not real happy with the entry point, but it's manageable. And then I've got $2.2 million in cash secured put collateral on CleanSpark. I didn't stutter. It's 2.2 million because I like what they did with the convertible note. And we'll talk about that in a little bit. I've got all the shares for sale at $12.50 for February 21st with an agreement to buy 40,000 more shares at $9.50 on Valentine's Day, an agreement to buy an additional 40,000 shares at $8 on 3/21, and an additional 200,000 shares at $7.50 for January of 2026. So for somebody to say that I'm not bullish on CleanSpark, I'm going to have to call bullshit on that one. You know what I mean? Because I'm willing to buy it on my terms. You know what I mean? And my terms is I'll load the boat at 750. And if y'all think that I'm loading the boat at 750, this thing were to crash at 5, then I would just double the share count at 5. Because the way that they short up their balance sheet with the way they chose to handle their convertible note, this company financially, dude, mathematically, you can't go out of business anytime soon. And I really, really like what they did, private jet and all. I'll make the CEO one day and maybe he'll give me a ride on the damn thing. So there's that. And then we've got Marathon. This company here is probably best in class right now of the miners. That's right. I didn't study it. It is best in class right now. Is it going to stay there? I don't know. And I just like Jason a lot more than I'm not as fond of Fred Thiel, the CEO of this company. And that is literally a reflection of why it is at that size in the portfolio, because management is one of the key ingredients for me that I study. And whenever I watched all these interviews of Fred Thiel in comparison to Jason Les, the story would change a little bit more with Fred as opposed to Jason. Like what you see is what you get with Jason, and I wasn't getting that with Fred, so it just gave me cause to pause. But we can't negate the fact that these guys are mining a shitload of Bitcoin, and they're more innovative than Riot is. So I've got 10,000 shares at 21.20. This is like my fourth or fifth time to own shares of Marathon, and made over seven figures with Marathon. And there is an agreement to buy $400,000 worth more at $20 in March. And I've got all the shares for sale at $25.50. But I'm not emotionally attached to any of those shares aside from a little bit Riot, if that makes sense. So that's what's going on with the positions. What do you got for me?
What's the thought process about going out multi-month? Is it just to capture more premium, or because I usually stick to like 2 weeks out, a week out, 3 weeks out, but you're going out multi-month, which is interesting to me.
Yeah. Are you talking about on the cash secured put side of things?
Mm-hmm.
Yeah. So on CleanSpark, that's my backstop trade. That's where I load up on a stock that I'm like, dude, if it were to hit these levels, I would absolutely be okay owning it, because if we want to actually look at that trade, I haven't talked about the backstop trade in a while. I'm actually saving this information for the next Wheeler seminar, but I'll give you a little preview. So this is like the backbone of my entire strategy, guys. It's all based on these backstop trades, and it's where you sell a leap put, if you will. Instead of buying leaps, I sell leaps, and I ring the cash register in a really, really big way. So this is how it all played out. I did this. I started this on January 2022, or January the 22nd, and I had to do it in several tranches because you can only do 200 contracts at a time on Robinhood if you're collecting over $25 a contract. So you guys will see on January the 22nd, I sold 200 contracts, 200 contracts, 200, 50, 200, 150, 200, 200, 200, 200, and 200, and got about $43,000, give or take, each time. So I had a big trade on SOXL that I had made about $80,000 or $90,000, and it was like 1.5 million in collateral. So I freed up all of that collateral when SOXL shot up to like $35 or whatever it was that week. And I moved that money over to CleanSpark because I just thought that CleanSpark was safer for me. Like, again, my risk tolerance. And then if you look at the amount of money that they paid for that particular trade, yes, baby. Whenever baby, the camera's on. So anyway, let me see if I can find that trade here. So the break even on this one, Tevis, is $5.36 when you consider the premiums. So I'm like, okay, as long as CleanSpark stays above 536, right, I'd probably be willing to take ownership of all of these shares, and then I could just sell very aggressive cover calls at 750 and bring in all of that premium, and then I could just break even on the shares. But if I get away with a couple of rounds of premium, then I can maybe increase my strike price to $8.50, and eventually maybe 10, and then now I can make $2.50 on 200,000 shares, plus all the premiums going in and going out. So I literally saw an opportunity to make $1 million there with CleanSpark.
So let me ask you this then: if it's so far like out, if it's in 2026, why not go in the money? Like, why not write it at 11 a put?
Because on these trades, when I'm tying up that kind of capital, I don't want to be synthetically long and wrong.
Right.
I want to legitimately put myself in a position to where I'm daring the market to put these shares in my account.
Right.
Because I just rang the cash register for about $200,000 or $300,000, whatever it added up to, right? That's $43,000 times 10, so about $400 and some thousand. I have to look at the tracker; it'll tell me. So let me pull up the tracker, and I'll get y'all guys an exact number. but I want to say it's about like 430 grand or something like that. And I'm like, I see a world where I could get another 430 or 450 grand on the other side as a covered call, or let's say it's trading at like 7, something like that. In December, I could roll all of these another year and probably keep the 750 or lower it to 7 and probably ring the cash register for another $250,000 and take some risk off the table. And just keep playing that game. And then eventually I can lower the adjusted cost basis to 0. Because if you look at this right here, guys, you will see I put these all as one trade because I got the average was 214. So I tied up the 1.5 million in collateral and I got $428,000 in premium. So I was like, so maybe I can get it to the point to where before I actually take ownership of those shares, I can collect $750,000 in premium total, then take ownership of those shares. And I can put myself in a situation where mathematically, as long as CleanSpark's not going out of business, I can manufacture the win. And the reason I'm comfortable going to January 2026 is because of their balance sheet and everything that they did with their convertible note. They're not going to go out of business during that time frame, bro. And in fact, I don't even worry about them going out of business. This is not a business that is going to survive. In my opinion, this is a business that is going to thrive. Like, I think it's a 3-horse race. If I wanted to say that it was a 4-horse race, because I've been doing a little more due diligence on it, I would say that Iris would be the other one. Iron Energy, Iris, I'm not sure what you call it. IREN is the ticker. I would say that they would be the 4th horse out of all of the other miners. All of them. I think it's a 4-horse race. I know that Core Scientific, Wolf, Cypher, none of these are slouches, but I'm just talking about if I had to pick 4, there's about 15 or 20 of them that are publicly traded. And I've been in this space for going on 5 years now. I would say that the 4-horse race is these 3, and then I would throw Iron in there as well, or Iris Energy. Any questions so far on how I'm playing this one right here, Tevis?
No, I mean, it makes sense. It's interesting. So the 1.5 million, do you actually lock that up, or is that just a commitment in 2026? Can't you use that money until then?
No, it's a cash secured put. And the reason I like doing it is because I locked up the 1.5, but they paid me the 428 up front. And then I can use that 428 to sell short dated cash secured puts along the way. So because of that 1.5, now that 428 can maybe turn into 528 or 628 by the time we get back to that expiration date. And that's why my ROI keeps beating the market over and over again. Because of that backstop trade, because I'm just playing a game of math. I'm not all up in my emotions.
So then the short dated cash secured puts you put on with the premium money from the Leap, that's more aggressive, right? Like, do you write those
absolutely
closer to the money?
So if I look at these, I've got the short dated, and we'll stay on CleanSpark, right? So I've got 400 cash secured puts at $9.50. And then I've got 400 cash secured puts at $8. These are for Valentine's Day, and these are for 3/21. I expect both of these to expire out of the money. So I'll have rung the cash register there, and you'll see them right there. I got 7,800 and 10,800. So the premiums at 428 grand already allowed me to ring the cash register for another $19,000 right there, as you guys see. So this is where I feel like I'm playing checker or chess sometimes, while a lot of wheelers are playing checkers. You know what I mean? And then I take more capital because I don't have enough. If you do the math, that's why it says that I tied up 2.2 million. And then I did the same thing back in the day. Like, this is a while ago. I did the $8 cash secured puts for 3/21 because I was like, well, this one's a no-brainer. I did these on 12/3.
Right.
And you'll see the trades right there. I got 24.4 and got 22,000. That's another $46,400 I'm ringing the cash register on. And bro, that's probably like a 20 delta. Yeah, 21 delta. So there's a 79% chance that I don't have to do shit and these expire out of the money, and they're going to release all of that capital. So that's why, like, a lot of people want to do the monthlies, the weeklies, and all that stuff, because you want like something to do and you want to push buttons. And I'm like, I'm doing the American way. I want to work less and make more. You know what I mean? Like, big chunks of money. It might not be as much money percentage wise, but I'm a real big fan of having control of my time.
So you're essentially just running a mini wheel with the premiums from your Leap put.
Yeah. And I added more collateral as well. So I'm
Okay.
essentially I'm compounding premium on top of premium. And when I look at that 2 million, let's call it $2 million over the course of that 12 to 15-month period, I'll have generated about 40% in premiums with that amount of money. And I never put myself in a situation where I'm like, oh my God, it's expiration Friday and all this other stupid shit. Because I'm here for the dollar. I'm not here for the drama.
Right.
Like I'm here for the dollars, a lot of it. So that's the cornerstone to my strategy. It's like, let me put a shitload of money up on a stock that I believe in at a price to where I don't even have to look at it because I don't give a shit. I either own the shares or I don't, and I'm perfectly okay with either scenario. And that's where you want to live, Tevis, because I feel like you're going to do this for a living eventually as you build up your bankroll and stuff. And I want you to put like 50, 60% of your money into these sleep well at night trade type things. If they work for you, CleanSpark works for me because I've done a lot of the homework. You follow me?
Yeah.
I wanted to do it on Riot, but Riot had already shot up because I've done this trade on Riot several times. But I wasn't going to get the same premium. Like to get the premium that CleanSpark was giving me at $7.50, I had to do it at $10 on Riot. And truth be told, I'm a lot more comfortable with CleanSpark at $7.50 than I am with Riot at 10.
Right. Yeah.
Just from a manufacturing the win perspective.
Yeah, that's wild, dude. It's like a whole other layer to this that I'm not unlocking.
Well, I do call myself TJ the Will Deal. So.
Yeah, no, I get it. But I mean, look, I wanna push you on that idea of a synthetic long by writing it because, like, okay, let's say for SoFi, because that's something that I would be super comfortable with, right?
Sure, and I've done it, and it's backfired on SoFi. I'm gonna see if I can find the trade.
It's backfired because SoFi fell and stayed there for years, right?
Yeah, dude, I took ownership of a lot of these shares, bro. A lot of these shares at $12.50. So, and then this was when SoFi was trading at like 6 or 7, dude. And I was just like, so here we go. So this goes all the way back, guys. This is the kind of transparency you ain't gonna find at your boy Invest with Henry. You know what I'm saying? You're gonna pay a lot of money for this kind of stuff. So I'm just digging at him because I think he's being too grifty, bro. Like, stop it already. You're amazing. You're really good at what you do. Stop trying to sell your audience too much shit. So I was over here messing with this thing back in September 2021, bought 200 shares at 17.10, bought 1,000 shares at 13.66, bought 1,300 shares at 5.11. So y'all see what happened there? Y'all see what happened between January the 13th and September 26th of 2022? This shit tanked a lot, right? So I'm just still trying to build this position. In August, I buy 1,700 shares at 8.52. So this thing's like all over the place. And then buy 10,000 shares at 7.53, 20,000 shares at 6.72, 30,000 shares at $8. I did this one live on the channel on March the 5th of last year, but there was 127 contracts at 137. This is where I bought the leaps. I bought more leaps at $10, bought more leaps, paid 24,000 for those, bought the calls 8,400, bought 25,000 shares at 738. And you guys can just see. So it didn't show you where I did get put 40,000 shares at $12.50 when SoFi was trading at about $6. So the gimme was they paid me a lot of premium. The gotcha was if it doesn't pump like you think that it is going to pump, well, you're going to be bag holding for a while. And I found myself having to sell covered calls below my cost basis. So that introduced a different level of risk into the equation because I couldn't afford to be holding all of these shares and not ring the cash register because my individual cash, or it was called brokerage cash at the time, it wasn't substantial enough, so I wasn't prepared to buy the dip. So when I realized that the account was undercapitalized for what I was trying to do, I had to move some monies around, and that's how the deposits happened, and the portfolio. You know, we started growing it a lot bigger because I was playing too big for the amount of capital that I had at the time.
Yeah, but I guess my question is like, and I get that scenario, but if it's truly a stock that you want to hold long term, writing closer to at the money leap puts would give you way more premium than if you're writing at like a 20 delta leap put. And with that extra premium, you could generate even more over the next 2 years. I I don't know. It's
That's
maybe
a, no, that's a real good question. I think the only part that you're not really registering is that you're also tying up more capital.
I see.
You follow me? Because because you got to look at the margin maintenance, right? So whenever you have, and guys, we're going to Wheeler's 301 now, right? So let's look at the books. So there's 2.7 in cash, give or take. I don't know why this thing's slow. Bear with me. Let's hit a little refresher real quick.
Okay, I get you. That's interesting.
So there's 2.6 in cash. The margin total is 5.9. Options collateral is 5.8. So I'm going to give you all an example of how margin really works. So let's say I want to buy shares outright of SoFi. Fair enough? So we want to buy shares of SoFi. We just go hit buy shares of SoFi. It says 2.639 in buying power. Do you guys see that? Right there on the bottom right under trade now.
Yep.
Do you see the 2.69 in buying power available? So now let's say I wanted to trade options and we want to do what Tevis is talking about. We're going to go, let's just match it up with Anthony Noto. And we're like, let me go do a cash secured put in the money at $20. Fair enough?
Yep.
You see how the buying power is only 1.3? So it really, really hamstrings your situation. That's why I don't recommend going synthetically long like that. Because you're getting more money on a percentage basis, but then you also lose a big portion of your margin because I'm selling these. And keep in mind that I sold that cash secured put on CleanSpark on margin. I didn't even really use cash for that one. So I literally just used paper money and out of thin air and created almost $500,000 because of the way the account is set up. Because you'll know that I'm selling cash secured puts on margin, because if we go back to this buying power, you're going to see that the individual cash is 2.6 and the options collateral is 5.8. So I'm using a little over $3 million in margin secured puts. Because if I take ownership of shares that exceeds 2.627, make no mistake about it, I will be in margin at that point. Does everybody understand that? So the 1.5 in the distance is actually on margin. So I'm like, in what world can I generate almost $500,000 or $428,000 for agreeing to buy something at a price that is extremely attractive to me? And if I wasn't using margin, I'm not even qualified to place that trade. My goodness, bro. But this is where I say there's a thing about using margin, and there's a thing about using margin on paper and not actually having to pay interest on it responsibly and building the shit out of your individual cash so that maybe one day you don't have to use margin.
I mean, but doesn't that restrict you though to make short-term moves? So for example, this DeepSeek AI thing came out, NVIDIA tanked to like 120. And for me, like I was saying, that's the easiest cash secured put of your life right there, because that, and I think it bounced back like 8% today. And I didn't have money. So I'm like, okay, cool. Like, let me just do it on margin. But if I was doing this and I tie up all my margin over a 2-year deal, let's say, then I don't have the flexibility to maneuver in short term.
Right. So this is a bigger account strategy. And this was my play when it tanked, as I went with SOXL. So I sold these yesterday, 127, right? It tanked and I did 400 contracts and I picked up whatever that is, 62, 72, I don't know, $80,000 or whatever it is.
Yeah, 79.
And I tied up however much money that is in collateral, 960,000. So I tied up 960,000 for 3 weeks and brought in over 80 grand, bro. So like 7 or 8%. So 8%. I maintain that flexibility, but I'm also, the one thing that I don't get credit for a lot is I'm really, really good at this thing called bankroll management.
Yeah.
like, dude, that's like, to me, that is the name of the game. Is the person that can manage their bankroll and their emotions is the person that's going to win over long periods of time. Like, that's like the golden quote that I could give you guys, but like, I don't get enough credit and I don't want it. It doesn't matter. It's not going to affect the balance in the portfolio. But what I'm saying is I'm really good at managing my bankroll, and I'm always ringing the cash register to sell cash, secure puts, cover costs, collect premium, roll when it makes dollars and cents, so that I know that I'm always adequately prepared to buy the damn dip. And then I also bought a little bit of the dip on NVIDIA yesterday because I was like, well, this shit seems a little overblown. So I took a stab at NVIDIA and picked up 1,000 shares yesterday as well. And I
You
didn't
just
get the
bought
best.
it on the open market?
Yeah, I just bought it in the open market at 126, and I immediately sold cover calls against it because I'm like, I know I'm not going to buy the bottom, but it doesn't matter. I'm going to get a rebate over here by selling cover calls against those shares. And I brought in like 3,600 bucks. And I agreed to sell those shares for a profit on 214. And it looks like we're on our way back to 135. And I'm like, okay, cool. This might just end up being a swing trade. I wasn't in NVIDIA before. I really rang the cash register on that SOXL because NVIDIA is about 8 to 10% of that fund anyway. So I have my exposure over there, if you will. So I still stayed prepared. So I guess I don't recommend, again, you got to look at position sizing and all that stuff, right? So I'm not saying go all crazy and go ham and go do cash secured puts on CleanSpark at those levels, because you can get, 28%. I think is what I got on that cash secured put, one shot. And then I use all of that money to try to get another 10 to 12 over the course of that same time period. And now I'm like, shit, on that part of the portfolio, I got 40% in premiums. So that's why when you see wheelers make claims like I get 30 to 50% a year, this is the kind of stuff that they're doing.
Yeah. I mean, right now I have I have a separate portfolio that's just for wheeling.
Sure.
And for the past month or so, since the beginning of November, 2 months, 3 months, I was doing cash secured puts exclusively, just collecting premium, never getting assigned, sticking to that 20, delta around that range. And then I started playing some more aggressive stuff and I started getting assigned. And I did, I did like 4,000 shares of SoFi, around 15, but like with the premiums, it was around 14 realistically. SoFi pumped to 18. And then I wrote covered calls at 22, 23. And I think the problem that I did there is that I wrote the covered calls so close in time duration that I wasn't able to just juice out as much premium as I would have wanted to. I think I got 20 cents or, 22 cents or something, like basically like 1%. What is there like a optimal time duration you go in that situation for covered calls, like a month out, or do you just play it by year mostly?
Yeah, it really depends on what side of the binary event I'm on, right? So I'm the tasty trade way, 30 to 45 days out, manage at 21 days to expiration. On cash secured puts, it's a lot easier because it's so much easier mathematically to get that first 50% out of that contract. Yeah. You got to struggle for that last 50% because these Greeks are like worker bees and they got to get the delta to -1, 0, or +1, depending on where you're at in the equation. And they got to do that by a certain time. It's called the expiration date. That's why you have all of these gamma squeezes and these terminology that people utilize, because it's shit or get out the pot time on expiration.
Yeah.
You can go from a 20 delta to a 100 delta, and it's going to happen mathematically for you, or you're going to go from like a 90 to 0 if the tables turn on you. And it has to happen mathematically by expiration, right? If you wait.
Well, yeah. I noticed that like in real time because I was placing trades that were so close to the strike. Like if I place a Tesla 400 and Tesla's trading at like 401, 398, 402, 399, you would see the price of that option go like plus 50%, minus 50%. On expiration day, it was just insane. Yeah, whenever SoFi had earnings, this thing going into those earnings, and I was live on the channel, this was trading at -96%. And it went from -96% to 84% positive as soon as SoFi tanked. And we saw it in real time because Delta is a real thing. Gamma, Theta, Vega, and Rho, that's a real thing. It's a real thing. And then the beautiful thing is
I was always going to collect that data. And that's what I love about selling options, guys, is you don't need anything to happen aside from the passage of time. And you could actually be directionally wrong a little bit as long as you don't screw the boots too bad. You can still win that trade, even though on paper it looks like you lost it. You know what I mean? It's the weirdest thing. And I was like, well, I know I'm not real good at buying the bottom or the top. So selling options was kind of like that margin of safety that I needed to be able to carve my niche out on the stock market.
When it comes to rolling, I know you said like the rule of thumb is when your break even is breached. Do you ever break that rule of thumb? So for example, like if I have a cash secured put on SoFi, I don't know, like let's say I have it at 18 and we go through earnings and SoFi's at 15. My break even is breached immediately because of a binary event. Do you just in that situation like roll out and down, or do you roll just out, or like how would you play that?
A lot of it, it's all situational, right? But the biggest thing that it depends on is whether or not you're comfortable with assignment. Because you don't have to do anything if you're comfortable with assignment. If you think that it's an overreaction and you think that the thing's just going to dump temporarily and it's more than likely going to bounce back, you can just let it ride. That way you can get some more data off the clock. Because whenever you buy the close, you have to give back that extrinsic value, right? And on top of if you have an intrinsic value, that's when it becomes harder to roll down and out for a credit. So if you milk all the data off the clock, then it's going to give you your best chance to be able to roll down and out for a credit, because there is no more extrinsic value left in the contract, especially if you roll at about noon on that expiration day. Theoretically, if you're okay with an early assignment situation as well, the beautiful thing about SoFi, it is a non-dividend paying stock, so they're not really financially incentivized to put those shares on you or call those shares from you before the expiration date. Like, what is their financial incentive?
So I think like I would always be in a situation where I'm comfortable with assignment, because I'm not running this on stocks that are like, I'm not making a habit of doing cash grabs. Like every now and again, if the market presents an opportunity, sure. But so at all points, I'm comfortable with assignment, but I'm thinking in that same example, and by the way, I don't have cash puts on SoFi at 18, but like, let's just say I had them at 18 and I want to roll them out, or I can get assigned. The problem with getting assigned though, TJ, is like if SoFi is at 15, then I'm going to have a real tough time writing covered calls. I would have to essentially write them at my break-even price. So I would have to write them at like 18 or 17.80 or whatever it ends up being. So by rolling, I can say, okay, cool, maybe I can collect a net credit, and I'm probably better off because I'm just buying more time until it goes back up, so that even when I do get assigned, I don't have a hard time running the other side of the wheel.
Right. No, I get it. Real quickly, guys, I don't have to pull money from this account because I get paid from the hedge fund. So I'm in a very unique situation because I live off of the salary. I don't live off of the portfolio. One day maybe we have to, right? And that changes things. That's it. So then I might have to play it a little bit more conservatively at that point, because then capital preservation becomes top of mind. Right now, I have that luxury of multiple six-figure salary and commission because of the fund. So that is makes it, a little bit nicer for me. So let's get into this right here. Tevis, are you familiar with what's going on with Riot over here? They launched formal evaluation of potential AI, HPC, high performance computing, artificial intelligence uses for remaining 600 megawatts of power capacity at Corsicana facility. Engages expert consultants to assess AI, HPC opportunities and plans to accelerate engagement with potential partners. Halts previously announced phase 2 Bitcoin mining expansion at Corsicana facility. Believes mixed use of facility has potential to maximize value for shareholders by providing long-term predictable cash flow to complement existing Bitcoin mining operations. An industry leader, blah, blah, blah. Riot is launching a formal process. They're basically saying the same thing. Then Jason Les says, our focus has always been on maximizing the potential of our assets and ensuring that any agreement we enter into with an AI HPC counterparty would be the result of an informed, thorough process that puts the best interests of all our shareholders first. This is why we're taking the actions announced today. while any conversion of our existing Bitcoin mining facilities to AI HPC use presents meaningful challenges and investments of time, we believe there is a significant opportunity to maximize the value of the 600 megawatts of remaining capacity available at the Corsicana facility and deliver substantial benefit for our shareholders. We're excited to be taking these steps and look forward to accelerating the process. Their chairman, basically the same shit. So I was over there, I looked him in the eye, and I asked him, is there a world where the rest of this expansion doesn't happen? In not so many words. And he says, we're entertaining everything, but that offer hasn't come our way. The only company that has legitimately done something in this space is Core Scientific.
How did it work out for them?
It's been working out pretty well. It gives them a substantial amount of predictable cash flow. So what I essentially told him, like what I think the biggest challenges that Riot has and all of the miners combined, and I throw them all in a general statement, is they've all been undercapitalized from day one. So whenever you're a publicly traded company and you're undercapitalized, you're running a very capital intensive business on a shoestring budget, you have two options. You can take on a lot of debt or you can issue a lot of shares.
Right.
All of these companies have done a combination of those essentially. Riot stayed away from the debt as long as they could. So they diluted the living shit out of shareholders. And I think that is why the trade might be dying, not dead, because these floats have just gotten so damn big, because this has been a game of survival for probably 4, 5, 6 years for these miners. Because at some point, you're going to have a real hard time getting people to want to invest in your hamburger stand when they're going to go in there and be like, I own 10% of your hamburger stand. And then, you know, after the shelf offering or whatever the hell they call it is all done, it's like now they only own a fraction of that. So people don't like to get diluted. Investors with real big money, they want to come in whenever they see that it's time for the inflection point. That's why they don't like to get in early. Like there's a big misnomer that you got to get in early to win, right? Like that was the mindset that I brought to the market when I first came in full time. But then I started looking at it from an institutional point of view, and it seems like the real big money doesn't get in until they know what way the current is flowing, you know? And that's when they're like, okay, cool. We missed that initial pump, but we also didn't deal with all of that uncertainty, and we're okay with that. Because we think this thing, and we can take this thing because they're going to pump the narrative as well, and we can take it from here all the way over here. And the retail investors like, I got to get in down here, and not it doesn't work, right? So I think that Riot is trying to attract hyperscalers and people with real big money by saying, hey, we are adequately capitalized now. We have a Bitcoin mining operation that at some point is going to be solvent because we made a pivot and we got a lot of money now on the balance sheet. Right. And now we get to decide, do we pump the Bitcoin mining arm or do we keep doing this data center thing? So I really love the position that Riot, quote unquote, positioned themselves in because of their infrastructure, because they asked me after we did the interview with Jason, and thank you for helping me with that. Is I thought that the moat, if there is a moat in this space, it has to be infrastructure. Right. And Riot, dude, I saw it. I was like, dude, these people have options. These people have options. And I felt like the pivot was, it was coming. It was a foregone conclusion because Jason had alluded to these transformers being very hard to acquire right now. And you can't really do shit without these transformers. So I feel like without telling me, he kind of told me that the pivot was happening. And I don't know if that was intentional or what. I'm hoping to have him on the channel one day. But as soon as we got dropped off at the hotel from our little joyride to Corsicana, Kristen told me, I feel like he just told you that they're going to do something with the AI space, or the HPC space, because she doesn't really know exactly what's going on there. Because she just kept talking about, he said they can't get any more transformers. So how in the hell are they going to build the rest of this thing out? And Kristen listens, bro, because I do a lot more talking. She does a lot more listening.
Right.
And she's like, I feel like he gave you the answers to the test, but there's only so many things that he can tell you as the CEO of a publicly traded company.
Right.
And I was just like, man, I started buying shares of freaking Riot, bro. Like from the standpoint of like, my goodness, I feel like this company is finally going to position themselves to be adequately capitalized.
I think it's smart, man. Like, I think from multiple perspectives, right? Like, you're diversifying, you're not tethering your ship to that Bitcoin, wave in general. If Bitcoin goes up, goes down, goes in circles, like, you're still going to be fine. It's predictable revenue. And at the end of the day, you're not putting pressure from a market perspective to sell your Bitcoin to pay your people, to sell your Bitcoin to fund new investments. Like, people will like that. So they know that with these miners, they're dilution machines because they don't want to sell their Bitcoin, and that's fine. But if now you have other streams of income that's predictable income, especially with a wave like AI, which is so big right now, then that's going to help them on their Bitcoin side as well, because people are going to say, okay, well, I know one miner at least is not going to dilute the hell out of me. It's going to be Riot. Why? Because of this other revenue stream. So I think it's smart on multiple different perspectives that they're doing it. I think all the miners should be considering a similar strategy because it's symbiotic in terms of helping them on their crypto strategy as well.
I agree. And I also want to harken back to the fact that this man told me these transformers, without them, nothing happens. And they're on back order, bro. So I was like, so how is all of this other expansion going to happen? Because at first it used to be like, you got to get a hold of these miners, right?
Right.
But then now there's another bottleneck, and it's these big ass transformers, and they're huge. So I'm like, they have a 600 megawatt. They got to do something with it. It's a lot of money to fund that expansion. But I think the beautiful thing is they already have the power. Everything's lined up. The infrastructure is there. It's all cleared out. It's ready to build. They got green lights. They got permits, right?
Right.
So it's easier to build one from scratch, in my opinion, than it is to redo what you've already got going. So they could still have this thing going. So we know what they're going to be giving us, 500 or 600 Bitcoin per month. And then the narrative is now going to be, where are you at with the other stuff, right? Where are you at with the other stuff? And then they have this Kentucky facility. They can probably build that one out a little more. And he said that they were also looking for more land as well.
So do you think that the move was purely reactive in terms of, oh, wait, we have this problem that we can't solve? Or do you think it was more premeditated in terms of saying, wait a minute, Bitcoin's going to go through a crypto winter. We don't want our stock to lose half of its value. Let's explore other avenues.
Bro, the one thing that I got from those two trips, because I visited them twice, once in Irvine and once in Corsicana, one time in Corsicana. The one thing that I got out of those meetings was this company is extremely deliberate. I feel like they ponder probably a little too much for my taste, meaning I would like them to act quickly.
Right.
But I think they really do the Benjamin Franklin, bro, where it's like you take the sheet of paper, or they're probably on a whiteboard with their board, and they have all the pros on this side and all the cons on that side, and they see what outweighs what. And they're just extremely, extremely deliberate, very, very slow to act, and they don't really pump a narrative until they really got something. And I like that, bro. It's a lot like the way Anthony Noto rolls, right? Like, he's not just going to do a conference call and just pump a bunch of smoke up your ass, because he knows at some point he's going to be held accountable for those words.
Do you think that other miners will follow suit?
I don't know that they have the infrastructure. I don't know them well enough. I'm sure there's some that do have the infrastructure. I don't know, though, because I haven't done the homework, right?
Right.
So now I'm really, really sinking my teeth into CleanSpark. And CleanSpark's like, hey, we're going to do this convertible note, but we're going to bet on ourselves. We're not going to buy Bitcoin at retail. We can mine that shit for $40,000. We're going to shore up our balance sheet, and we're going to tell investors, hey, until we get to like 24, 26 bucks, you guys, there's no more dilution.
Right.
And the market doesn't believe them yet because look where the stock price is.
Right.
So I think when they have an earnings call and their CEO and CFOs pump that narrative,
right.
I think CleanSpark is going to be a very, very fun miner to hold. Because, dude, isn't dilution been the elephant in the room, right? And CleanSpark is the first miner that I'm aware of that essentially just addressed it.
Right.
And hey, am I bad on the plane, right? am I bad on that one? Because y'all didn't like that one. So they got shit on for it. But now they're like, we don't need to dilute anymore because we have shored up the balance sheet once and for good, so to speak.
Mm-hmm.
And now we can go to work and we're going to bet on ourselves because we did a convertible note, but we did a David Copperfield. Y'all thought we were going to do X and we ended up doing Y, and this is why. So I got very bullish on CleanSpark because they've made a big bet on themselves. They're like, we're a very efficient miner, and we can't get to the point to where we want to pay $100,000 a coin when we can go mine this shit for 40 cents on the dollar.
Yeah. No, it's smart, right? Like I do think that demand is going to be there from an AI perspective as well, because like the whole market is so enamored with the potential that AI has, and a lot of investment is going to go in that space over the next several years. So from whatever way you slice it, whether it's the short-term sustainability of that balance sheet or the long-term potential of that space, I do think that it's a smart move.
Yeah. So there's that. Marathon. So let's do this. So all in all, you think that it's good, right?
Yes.
I did too. I'm gonna reach out to Jason and company after they do earnings and see if he'll do us a courtesy of coming on the show again to just kind of enlighten us, because we're all speculating, right? That's what we do, right? We're all speculating on the information that we have at hand. I'm sure there's quiet periods and all that stuff. He'll make the rounds. He'll go on McNally Money and all that stuff, and I'll have a lot of the answers to the test at that point. You know, that channel is a lot bigger than ours, but I'm hoping that he will do us a solid and come on the channel again, and we'll get up to speed on why they made those decisions, and do they have a hyperscaler on the hook and all that stuff? Like, how advanced are those talks? Are they able to talk about it? Because I'm sure that he'll add a lot of color to it. They're not just going to put out that press release and not address it come earnings.
Mm-hmm.
So I'm really hoping that you can help me with that as well, because I'll just ask the basic questions, like, you know, like, where are we at in the poker hand? Do you feel like you're holding aces? Do you feel like, you know what I'm saying? Like, but you'll be able to address stuff that really helps the audience. So the other company I wanted to talk about a little bit was CleanSpark. So, dude, the only thing that CleanSpark does is they mine a shitload of Bitcoin, dude. Look at this, man. In December, they mined 668 Bitcoin and 7,000 in 2024. I mean, 287% hash rate growth, 33.3 efficiency improvement year over year. I mean, this thing is, it says 2024 marked a transformative year for CleanSpark, where we achieved true escape velocity in our industry, said Zach Bradford, the CEO and president of CleanSpark. We have firmly established ourselves as a U.S. leader in operational hash rate, cost efficiency, fleet performance, Bitcoin treasury management, and portfolio-wide uptime. Surpassing our year-end guidance, we reached an impressive 31.9 exahash per second and enhanced fleet efficiency to under 17.6 joules per terahash ahead of schedule. We strategically expanded into 3 new states, Mississippi, Tennessee, and Wyoming, while completing multiple site expansions. Notably, we crossed a historic milestone by mining our 20,000 Bitcoin, a testament to our operational excellence since mining our first Bitcoin just 4 years ago. With the successful closing of a $650 million zero coupon convertible bond offering in December, we're fully equipped to execute our strategic objectives as we gear up to achieve 50 exahash per second by mid-2025, Our growth strategy is not only ambitious, but fully funded, positioning CleanSpark to lead the industry into this next phase of innovation and scale. So here it just gives you all these metrics again. Pretty interesting. Pretty interesting. And here it says here, they announced the closing of the 650 million zero coupon convertible notes to support its growth through 50 exahash per second, a stock buyback, and a cap call. So they pulled a SoFi. They started using really complex language, if you will, for simple-minded folks like myself. Because I like plain English. Like, talk to me and make it easy for me to understand so that I can go explain it to someone else. So how familiar are you with what CleanSpark did? And are you able to like look at this article and add any color? Because I don't exactly know what they did. I just know that I like it, if that makes sense.
Yeah, I mean, it's interesting because all of these miners seem to be diversifying in their strategy. In terms of doing that sailor approach of raising more money. Like with CleanSpark, I understand the thought process of betting on themselves because they're ensuring no more future dilution. Like, and that's a very important thing because dilution for the miners is a big reason that people stay away.
Yeah.
But at the same time, CleanSpark, different than Riot, is all in on the Bitcoin space. So if CleanSpark says, "Hey, we're actually playing around with new revenue sources, new verticals, new market opportunities," and that's one thing. But right now, they're like a leader in terms of in the Bitcoin space in general, right? So it's really if you believe that space is going to be successful, because that's really what it's riding on. It's dilution that's a negative, and it's also the potential of the space in general of what they're holding in their hand, so to speak. I got to bounce in 10 minutes, but I'd really love to just focus the next 10 minutes of conversation around that trade in general and whether we think, it's dead or because really that will answer the question of, is this good or bad for CleanSpark? Because if we think that we're bearish on Bitcoin as a whole, then it doesn't matter how optimized CleanSpark is. The entire industry is falling, right? But if it's the other way around, then we get into the other question of saying, okay, the macro is good. How's the micro? Is it CleanSpark or Marathon, so to speak?
I love both companies from the standpoint that they position themselves to win in their respective ways.
Right.
Because Riot already has the ability to mine quite a bit of Bitcoin, sitting at, mid 30s in the exahash, right?
Right.
So they can just get more efficient with that while they try to land a $5 or $10 billion deal, which I bet is what they're going for.
Mm-hmm.
I don't know that CleanSpark had the ability to do that because I'm not familiar enough with their infrastructure. I don't know if they had all the power credits lined up. This is again where I've been saying and banging the table over and over that Riot's infrastructure gave them options that maybe other Bitcoin miners just simply don't have.
Right.
So I think that CleanSpark had no choice but to go all in. And I love that they went all in because, I mean, hell, Michael Saylor kind of went all in doing his little quasi Bitcoin Ponzi, whatever the hell he's got going on that nobody truly understands. Some people are real smart at pretending they do, but only Michael Saylor knows, right? Like really knows. And you can't argue with the results. Like I'm a very results oriented person. So I think that at the end of the day, we're gonna give this probably another year. And then I think that the results will tell the story. They'll tell the truth, right? Because at the end of the day, we're all just speculating. And that's why investing is so hard, because the stock market is a forward-looking instrument. So you have to bet on the come, and then you'll know whether or not you were right down the road. And that's why it's not an easy game. And that's why I sell puts and calls to kind of give myself that margin of safety.
Well, I mean, look, I think on one level, by selling puts and calls, you can ensure your own success on any stock, right? Then the other level is, okay, for somebody who's buying and holding CleanSpark, let's say, they're really betting that Bitcoin in the next year is going to be higher than where it is right now, because that's how CleanSpark gains in value, is if Bitcoin gains in value.
Right.
But if you're thinking that, okay, Bitcoin's going to go through a crypto winter, and it doesn't really matter how many thousands of Bitcoin CleanSpark holds, because if Bitcoin drops 50% in value, then CleanSpark's going to drop by the same amount, then it's a different story, right? Then Riot is going to be a winner because they're diversifying the revenue streams. And if Bitcoin falls 50%, then Riot is still going to, make money from that other contract on AI. So this is why I'm saying, like, it really matters on what your stance is with Bitcoin, because the respective miners are doing so different strategies.
Absolutely. And then that is why Riot is my miner. I'm Team Riot, right? If you're, I don't know, my cap's not on the desk today, but I'm Team Riot because I feel like Riot positioned themselves to be able to afford to have these options.
Right.
And they can mine a substantial amount of Bitcoin, bring plenty of money through the door. Bitcoin keeps going up and to the right because Riot is very bullish on Bitcoin.
Yep.
But I think that Riot just proved to me and to everyone that's paying attention is that Riot is bullish on making money. And what shareholder doesn't like that idea? You know what I mean? Like, they're like, I'd love to just make all of the money on Bitcoin. Bitcoin goes to $1 million a coin, and that's fine and dandy. And that's great. We're positioned for that.
Yeah.
But hey, if somebody's going to write you a $5 or $10 billion check, if you get the right dance partner, I mean, I think you'd be dumb not to entertain that. And I like that they were willing to entertain those viable options if they're truly out there.
And I mean, look, I think the market is also Team Riot to some degree because that's what they're telegraphing. At least Riot is now trading higher than CleanSpark is. Meanwhile, CleanSpark, is more entrenched in the Bitcoin space than Riot is. And this is what started that conversation around, like, hey, is that trade dead, or what is that status of that trade right now? Because it went Marathon, CleanSpark, Riot in that order, 1, 2, 3. That was the podium. But now Riot's in second place, and you got to ask yourself, okay, like, what changed? And it seems that the market is liking the fact that Riot is diversifying. I mean, I might just be making that up, but I'm just pointing to the data and drawing a narrative.
Yeah. One of the M's that I look at is management.
Yeah.
And I'm very, very biased on Team Riot because I've had an opportunity to meet 4 or 5 key players of their management team.
Right.
And dude, each and every one of those guys was way smarter than me, and I like that.
Right.
Like, Jason was talking to me about some shit with miners, bro, and he knew it was going over my head. He fucking knew it. He plays poker. He knows when you're like a deer in headlights. But I was able to go research the shit that he told me after the fact. So he's like super nerdy with this whole Bitcoin thing. That this gentleman, Benjamin, he lives in Canada actually. Or he's from Canada. He's their chairman or whatever. He actually owns more shares of Riot than Jason does, last I checked. And then they had this guy, Phil, that is just, dude, he understands options and stuff. You know what I mean? Like, these people are just like really, really in the know. And they're out there having, all these high level discussions, attending all of these Bitcoin conferences and all that stuff. But they're playing the long game. But they really are big, big believers in Bitcoin. Dude, Riot has the freaking Bitcoin white paper on their walls at their office in Irvine.
Right.
But I think that collectively, the brass, the board, everybody that the people that I've met there, the management team, they're all bullish on making money. And each and every one of those people, they had that gleam in their eye. Like, I'm talking about, like, when I went to the Corsicana, it's like Jason said on this channel, they need Riot to work.
Right.
Like that lady, her name, I don't know how to say her name. Real beautiful woman. She runs the entire mining operation. Bro, she needs this shit to work.
Right.
Like, there's no outs for them. You know what I mean? So I think that they're all like, they probably all have a meeting of the minds there, and they're like, hey, we're going to do whatever we need to do to make this thing work, because failure is not an option.
Right.
It would be a lot easier if Bitcoin just goes to 1 million, right? That would be the easiest thing for them.
Right.
But at the same time, we owe it to ourselves and to the shareholders specifically that we have this infrastructure, and a hyperscaler is willing to give us a big fat check, and we don't necessarily have to pivot what we've already done. We can start from scratch with what's available to us. I mean, dude, that's kind of the best of both worlds, in my opinion.
Yeah.
And
No,
and that is why I became Team Riot when the writing like, it was on the walls for me that this management team. Now, mind you, I haven't delved into Clean Sparks management, and I haven't even been interested in doing so with Marathon.
yeah.
I need to have more of an open mind to do so with Marathon. I'm very interested in doing it with Clean Spark. You know, I may be singing a different song one day, but based on everything that I saw with Team Riot, I mean, dude, if I just had, if all I could do is hold Riot, SoFi, and Tesla in the portfolio and nothing else, I'm comfortable. I'm saying it's a good place to be mentally. You know what I mean?
I get you.
It's a good place to be mentally, and I'm super excited about it. But we'll see what happens. I'm also excited to hear updates, right? Because you can only pump a narrative. At some point, you're going to have to deliver a dance part.
Yeah.
Because what happens if they lose all of this time, right? Because there's a huge opportunity cost there, right? And I know you got to go, and I did too. But there's a huge opportunity cost component here. They stop all of this expansion talk, and then they fail to get a dance partner.
Yeah.
I think the market crucifies them.
Oh, absolutely. But like, this is why I think I'm excited to have more conversations with Jason, because the first one was just a primer of, getting to know you. And I feel like we didn't really get a good chance to dive into the heart of the conversation. Like we talked mostly about like the Saylor MicroStrategy approach, and that was the meatiest conversation we had. But I think this is going to be also really important because it provides a lot of light for investors to make a decision on which horse they want to back, right?
Mm-hmm. Agreed. So I don't know, man. I'm super bullish on the company, but at the same time, I'm not blind to the fact that they've kind of put themselves in a bit of a corner as well.
Mm-hmm.
So that's kind of the thing. It's kind of like with SoFi and the EPS thing, right? They put themselves in a little bit of a corner, so now they're going to have to deliver.
Yeah.
Now they're going to have to deliver, and I think we'll see. The story's still being written. I'm excited, but in the meantime, I'm able to work it out because I can sell puts and calls, and collect premium and let the story play out.
Yeah.
And I am curious to see how I'll react and how we'll navigate this entire situation if they were to fail to deliver that dance partner.
Yeah.
So that's I don't know, man. It's exciting, but they did create like a shitter or get off the pot scenario.
No, I like it though. That's exactly where I want my companies to be. It's like just enough pressure to make them perform, but not so much that it sort of breaks the narrative.
Yeah, I love it. Anyway, appreciate you so much for coming on. We got to go ahead and wrap it up, guys. I hope y'all got value out of this episode. Y'all can do me a favor and hit the like and subscribe. Same on Tevis's channel as well for the folks that are watching on my side and your side. Appreciate you guys. I get it rocking and rolling. TJ the Wheel Deal signing off as always. Sky stay blue stock screen. Peace out. God bless you guys.